Reserve Bank of India late last evening has issued clarifications to the queries on the new bank licensing guidelines issued in February 2013. To understand the fine print, let me now bring on board Mr. Kumar, Executive Director with India Bulls Housing Finance Limited. Along with him, Ashwin Parekh, he represents ENY. Gentlemen, good morning and thank you for joining us. Ashwin, let me kickstart the discussion with you. The broader message from Reserve Bank of India is absolutely crystal clear that serious players should only apply and the selection criteria will be very stringent.
Yeah, well, absolutely. I mean, you're getting a clear sense from the clarifications now that the regulator is very eager, to make sure that when it comes to examining the fit and proper aspect of the application, that there is very little of ambiguity, that as much of clarification as people sought through 443 questions is rendered now, making it, I suppose, more clear. I mean, at the end of it, we have to accept the fact that admitting a person in the banking sector is completely the regulator's prerogative, and in fact, all the stakeholders accept that. So to that extent, I suppose some element of judgment or some element of subjectiveness will certainly be there. In fact, the guidelines also do talk about that even after they find someone fit and proper, they still have the discretion. I mean, they may still not grant, that person the application. But I thought the clarity are well rendered. I mean, the clarifications are very well rendered, very well put out. So anybody who's applying should get good amount of clarity out of this, basically.
Talk about the sector or the category you represent, NBFC. Do you think Reserve Bank of India has done the right thing by not changing the basic definition for banks, and the fact that NBFCs will not get any kind of an preferred status when it comes to SLR and CRR?
Well, Nikunj, that was always on the cards. I mean, these clarifications that came in yesterday have not really sprung any great surprise. They were more or less in line with the broader guidelines that RBI released on 22nd of February. Yeah, the clarity helps. I mean, the RBI has been so meticulous, so painstaking in furnishing those clarifications, covering an entire canvas of questions numbering some 443, where they made it abundantly clear that there will be no special dispensation in the matters of prudential norms applicable, in the matter of priority sector lending, in the matter of CRR, SLR requirement, and also in the matter of asset liability management. So that was always the case. I mean, now the question is that they have given us 18 months transition time to become compliant with those stipulations, which I guess is a fair game.
Ashwin, what's your view when it comes to NOFHSC structure, and do you think that this kind of a structure will be difficult to implement when it comes to names like an L&T Finance, a Shriram Group or Shriram Transport Finance, and slightly simpler when it comes to IDFC and Mahindra Finance?
Well, yes, what will happen, I mean, when you create structures, at that point in time you have a certain application in mind. So all the names that you just mentioned and many more also would have perhaps created their structures in keeping with various other requirements, including when they admitted their foreign partners, for instance, they would have looked at different structures for getting them into the financial service activities depending on the risk that the foreign partners would like to take. Now, trying to dismantle those structures or to reorient them would require them to incur a lot of cost. There will be capital gains if there are demergers or mergers involved, and then it would also involve shareholders' consent if you are really going to make the promoter who's someone who's got at least 51% of his shares held by, which are widely held. So to that extent, the structural changes are going to be very difficult. The good thing about the clarifications is that it's not deviated from the February guidelines, and to that extent, from February onwards, people have got enough time to examine how many changes or what kind of changes, what options do they have in creating various structures to meet with NOFHC kind of requirements that the RBI has put out,
Ajit, in principle, now that it is public knowledge that India Bulls would be applying for the banking license. Which vehicle would you use? Are you likely to float a separate company, or you would like to apply for the banking license from your existing company, which is India Bull Housing Finance Limited?
No, I mean the guidelines really don't leave us much leeway. The fine print is fairly clear that well, you'll have to offer yourself a conversion in the event of your being granted in principle approval. I mean, you can't really sponsor a bank unlike what HDFC did 20 years back. So today, NBFCs or housing finance companies for that matter, let's not forget even housing finance company is one subset of the NBFC. So they have to pretty much convert their existing business into the bank. So that option is clearly not existing, that we retain our housing finance company status and also float a bank. Regarding your second question, whether we'll be looking at acquiring a bank, well, that probably doesn't fall within the ambit of these guidelines. That's a parallel process which might go on, the process of consolidation, mergers, acquisition. That's a separate ball game altogether and is no way linked to the new banking licenses. And as far as we are concerned as to how we are positioned, well, the predominant thing, I mean the most important thing for RBI to consider is what's your track record in the financial services arena. I mean, regardless of what other businesses you are, the point is if your predominant business is lending business and which spans over more than a decade, and how big a success or failure you have made out of it, so that will be the guiding factor. And there we are well positioned, I have absolutely no doubt in mind, and we are already a very diversified company. It has a diversified shareholding pattern. RBI's concern is that they don't really want a dominant shareholder. So that criteria is amply met because it's a publicly listed company, not only nationally but also internationally. And no single promoter holds significant control or influence as per RBI's definition here. So by all criteria, I would tend to believe that we are pretty much qualified to be a strong contender.
Ashwin, what's your view when it comes to the regulatory overlap for a company like Bajaj Finserv, which is into insurance business? Would conversion into a bank mean that even IRDA approval would be required, because IRDA is the sector regulator for insurance business?
Yes, I mean, you see, basically what will happen is, I mean, a little before Mr. Takru did explain something like this. You see, each regulator, I mean, there are three major let's say regulators in this sector. These sectorial regulators have their own requirements. The insurance regulator all through, has a very simple requirement. He says that the promoter should apply in his own name for an insurance license. He does not expect a promoter to form a subsidiary and the subsidiary organization to apply for an insurance license or an insurance registration. Now that concept is very clear. The clarity emerges from the fact that in order to keep that organization solvent, the regulator has to, whenever there is a need for putting additional capital, the regulator must directly meet with the promoter, not through the subsidiary. He has to really insist that the promoter keeps the insurance company solvent. Now that's a very clear requirement. Likewise, SEBI will have various requirements in regards those companies which are formed under, let's say, for the activities which SEBI regulates. So to that extent, each sectorial regulator will have his own set of requirements. RBI does touch upon this. What may now happen is, because of this particular aspect for life insurance, general insurance and going forward health insurance companies, IRDA and RBI will have to really work out a solution just for that part of the box in the NOFHC. All the other financial service activities will be separated and put in a different box. Insurance may perhaps be given some kind of a different treatment. Likewise, other companies under SEBI also may require different treatment. That's something RBI and SEBI will have to work out perhaps.
Ajit, for someone who's a minority shareholder of India Bulls Housing Finance, the first reaction could be India Bull Housing Finance will have to raise more money. They will have to change the ownership pattern. Banks are unlikely to make money in next 5 to 7 years. It's not worth the risk.
Well, that's a call that shareholders have to take. Right now, it's the board that has decided to apply for a banking license. I'm sure this matter would come up. It has to be ratified in the annual general body meeting. But regardless of whether first few years this business is not going to be profitable, the fact remains that you are creating an institution. A bank is always preferable to a non-bank. And Indiabulls Housing Finance is already a very profitable entity. It has almost 10 years track record of lending. It has asset book of close to 35,000 crore today, which is bigger than some of the smaller banks already, and definitely equal to some of the mid-size banks, particularly in the private sector. So for us, long-term benefits of converting into a bank far outweigh some of the short-term pains that probably have to be undergone. And also from the standpoint of financial inclusion, we do see the rural push a big opportunity. We don't look at it only from a compliance mindset. We do look at it as a proactive business opportunity, because rural India today is really offering a much wider business canvas. And our business model would encompass our strategy to scale up our rural business. So we don't look at it as a drag in any way, and we are amply poised to comply with all the prudential norms. Of course, there would be a transition time. The RBI has already given 18 months time to fall in line with the required structure in terms of NOFHC and some of the downselling of assets to other companies, and also we'll be amply positioned to achieve that.
Ashwin, final question from my side. Getting a new bank license is once in a lifetime opportunity, but for existing corporates, is it worth the risk? Because they'll be diluting, they'll be raising money, banks are unlikely to make money, and new bank licenses mean that the competition in the banking sector will only intensify.
No, absolutely. I think all along, personally I have maintained, after having worked in 5 other markets, 5 other jurisdictions before I came back to India, I'm very clear that those who are prepared to put money on a very, very long-term basis to begin with, and those who look at banking more as a responsibility rather than an opportunity are the ones. So in case of those corporates who have long-standing reputation, who have been here, who have participated in the India growth story, in the economic development of India, and over the last several decades, are really, in that sense, distinguished from or very different from, some of the others who may wish to apply for the licenses. But one thing is pretty clear, banking is serious business, it's a very long-term business, and therefore, if any promoter believes that he will be able to make some cash out, he can cash out of it in 5 to 10 years time, he would be sadly mistaken. The capital grows so large after a certain stage that he may just own a very small percentage. He leaves behind his characteristics, he leaves behind his flavor. In that functions well, then I suppose we're talking about very few corporates in this country who really meet with that particular requirement.
Ajit and Ashwin, really thank both of you for taking time out and chatting with us today on 18 Hour. Good to have you guys as always.